Hello and welcome. Thank you, Danny. Thank you, Nicola, for joining us on the panel debate today. How are you?
Very good, thank you.
Good. Loving the festive Santa's lair that you seem to have, Danny. Very good. Thank you very much for taking some time out today to join us. I know how busy everyone is. To talk about what we feel is a really relevant subject in the market at the moment, being self-employed. It's going to be really good for the brokers to kind of hear from L&G and from Knowledge Bank and have a look and some insight into some of the data that you have, which we will be bringing up later in the session. Of course, Craig, welcome to you as well. Thank you. I always leave you till last, but always really good to have a lender's perspective as well. So I'm going to direct the next few questions. So we've got around 20 minutes. I've got 5 questions, areas to cover. So I'll direct the questions at you, but feel free to interject if you want to add something to a specific part of the subject. Okay, so we're going to start at looking back. So the self-employed market has gone through a number of changes recently. We've seen lenders leave the market, some criteria changing, introducing tougher criteria. So in your opinion, what did the self-employed market look like pre-COVID, and what changes have come as an impact of the pandemic? I'm actually going to start with you, Craig, from a lender's perspective, please.
I think, well, pre-COVID, it was a really buoyant market. I think lenders, there was lots of different choices for brokers and customers, and lots of kind of appetite for self-employed. Sadly, I think that's got a lot worse over the last year. I think it's now much harder if you're self-employed. Self-employed is undoubtedly more complex than it was a year ago. And I think that means underwriters would normally need to see a self-employed case. I think that's probably harder for the high street lenders who naturally have got less underwriters. So I think that's led to some backlogs. I think we have seen quite a contraction with some lenders as well in terms of criteria. I think generally there's a misunderstanding from lenders that self-employed are higher risk and self-employed will be more affected than employed people during this crisis, which I just think is incorrect. You know, we all know people who have done well during the crisis. We know some people have sadly done badly, but actually most people haven't been that affected, and that's the same for self-employed. And we've certainly at Kensington always taken the view that self-employed are lower risk than employed. We know people have got better reserves. They can last longer than employed people because employed people get into the habit of thinking they're always going to get paid. So we're very favourable towards self-employed people. We haven't changed any policies. We'll still do 1 year's accounts. We're still very flexible on income. We'll take 100% of multiple incomes, and we'll still actually, for high earners, lend up to 6 times loan to income. So I think things sadly have got harder. I think it's more of a specialist market, but I think the main point is I don't think it's necessarily fair, because actually I think the self-employed are still a really good risk, and when you dig beneath the surface, a lot of them just haven't been that affected at all.
Yeah, absolutely. Nicola, and Knowledge Bank, what about your perspective?
I would agree with that, Craig, what Craig just said there. Absolutely. I mean, if you look over the last 10 years, things were really going in the right direction for self-employed people, and underwriting had come on in leaps and bounds, the propositions that lenders had. Obviously, the impact of the pandemic, it's had to have an impact, and it has. And as well as underwriting criteria, we've also seen the impact on processing times, on document checks, and all of that. So again, timescales sort of impacting there. But yeah, things do seem to have sort of rolled backwards, and it just seems to be one of those things that it's the self-employed market that gets hit first, and we see that. We do see that, and it tends to be, as it is definitely now the domain of the specialist lender again. But you know, the good thing is that there are lenders out there, as we've seen from the criteria that's available, lenders like Kensington that are looking at it differently. But things have changed, and things have sort of rolled back ever so slightly, I think.
Yeah, absolutely. And Danny, is there anything to add from an L&G perspective?
Well, I'd certainly concur with both Nicola and Craig there. You know, it's gone from being very positive to being, well, not very well supported at all, I think. But also got to reflect that whilst I think we are focusing on self-employed, the whole market was affected by COVID, and certainly a number of applicants across the piece would have struggled to get funding, and we know it sort of shut down. But I also think that this is a market that is generally favoured by the specialist lenders because they're very much more manual approach and taking time to understand. And a number of those had to pull out the market as well potential funding issues and things. So the choice was limited in a very unfortunate way. But thankfully we've now seen those lenders come back to market, and I think it's now about taking stock of what has happened, actually understanding, taking the time to maybe review what we currently do, and is there a way to get the self-employed back on more of an even keel to the employed market, and actually just maybe adapt the way that we do things. And I think it's just a great opportunity to think differently, think positively still, because they are a great opportunity for some great customers, and I do see this market actually growing.
Yeah, absolutely. There's some key points there, and I'll come back to some of them nearer the end of the debate, actually. So talking about change and adaptation in 2020, there's been lots of it. So far, it looks like this will continue into 2021 and beyond at some degree. Data for L&G and for Knowledge Bank is a huge part of what you do. What trends and changes have you seen within your business regarding self-employed inquiries? And Danny, I'll come straight back to you because I know we've got some graphs to share as well.
Yeah, no, thank you. And I think data has been very obvious. Both Nicola and I work very hard at this sort of stuff to try and use our systems and things that the technology developed to help the broker community. And the insights are fascinating. I've just got a couple of slides. So this one here, it shows that the query levels. We saw a big spike in inquiries after sort of the first release when we were allowed back out after lockdown. People really just trying to assess their circumstances. And it was, looking a lot around affordability and income, and well, what can I do, what can't I do? Because people wanted to come out and buy houses or refinance because maybe they had to work from home and things like that. And we see these sort of continued trends, and these are the top sort of 6 or 7 reasons that we see month on month now that people are using the criteria systems to find. But there's also a sign here around contractors. And Craig, I'm going to pick your brains a little bit later on in the session if we can, because IR35 is clearly an issue for some brokers and their understanding of the market and how the contractors will actually change to the new rules and adapt. But look, the common themes are here. It is about affordability, it is about income, and I think people were worried, they just wanted to see their options. We can move on to the next slide. The dots are actually showing where the brokers are situated, where they're looking for self-employed inquiries. The vast majority are actually coming through from the London and the South East area, moving up into East Midlands. But the chart shows, you've got a sort of spine there going all the way through up to sort of Manchester, Leeds area, as a lot of sort of self-employed customers there. I'm not saying other regions of the country are not having self-employed, but this seems to be the sort of core avenue that we're seeing the searches from brokers. And on the right-hand side, we've obviously launched our Smarter Fit proposition now, which looks at affordability, and the early results are actually indicating that for some self-employed customers, they're actually failing more on sort of income and to a degree on criteria, or maybe a mixture of both. And I think this has just been symptomatic of where the market's been over the last sort of a few months, and hopefully we can get that changing so more people are either more up to speed or have better opportunities, but actually the affordability models, the risk from lenders is actually improved, if you like, so the opportunities for those customers exist. So they were just 3 things that really stood out for me initially as part of this.
No, that's great. Thank you, Danny. And Nicola, Knowledge Bank, we've got some data from yourself as well, which we'll share on the screen. But the same question to you.
Yeah, I think we've seen massive changes, and as with this first slide here, you can see so as we look, so we've just picked 2 questions out that are on Knowledge Bank. So what around 1 year's accounts and what around the assessment of accounts for affordability. So just looking at those 2 questions that are often searched together, but the number of searches that are done, as you see, January and February started off quite level really, and then obviously it's nosedived as we went into our first lockdown. But then you can see that peak of inquiries in July. So this goes along with the trends that we've seen, people coming out of lockdown, looking at getting their finances in order, and also as well that there's been a massive spike in inquiries about people moving out of cities, wanting properties with spaces to work from home, as people are perhaps doubting that they'll go back into offices, and as businesses are reviewing the way they go. So you can see how that's sort of peaked in July, and it's only really sort of tailed off to the back end of the year. You can see that's sort of, those inquiries for self-employed clients are just there. And if we just move on to the next slide. this just, our inquiries increased by tenfold. Now, we don't have a mortgage desk, so like L&G have their mortgages, they'll help you place cases. So this is just brokers ringing into our broker support just to say, look, can you help us on this? We need to know more information. So we saw tenfold, you know, the number of inquiries relating to self-employed applicants, which is, and those ones on that slide are the ones that we were being asked about. Top of the list, absolutely additional documentation requirements. There's a lot of questions around that, as both brokers and lenders were trying to find their way and navigate through new requirements. If you just pop on to the next slide. So what you'll see on here, so we're looking across the board. So on Knowledge Bank, obviously we've got all of the lenders that are on there. And again, I'm just picking out those two questions, the assessment of accounts affordability and 1 year of accounts. So these are the changes so we're just looking at January to June 2020. And what's really, really interesting here is that January and February completely steady away. And I think that's because everybody knew there was something coming, but we didn't really necessarily know what and how hard. And as you can see, by April, lenders have really sort of made their changes, set their stall out, and then it does drop off then as we go into June, with not too many changes after that. So lenders are already saying, right, this is our stance on self-employed on self-employed applicants. And I think there's one more slide if we just have a look at that one. So this gives you an idea of the volumes that we've seen. So talking here about the self-employed income support scheme, which I know we're going to come on to later, that we've had 11,000 searches on that in the last 3 months of last year. So that's huge, you know, 11,000 brokers searching on behalf of their clients on what the situation is with regards to lenders accepting this self-employed income support scheme. And if you think that's just 11,000 searches in the last 3 months, and that's just on Knowledge Bank, that doesn't cover any other system, any other inquiries. So that's a tiny snapshot of how that's looking, and that's just in the last 3 months. So that's very recent.
Mm. Undoubtedly, there's a lot of demand for information and knowledge, absolutely. And Craig, good comments on that under the next question. Thank you very much, both of you, for sharing that data. It's really interesting, and hopefully the brokers that are listening in, most probably because they have self-employed clients, can maybe feel that they're not alone, and it's there. So historically, the self-employed market has always been an underserved area, which you've both commented on. However, in recent years, we have seen some relaxation of criteria and of products. How do you think the self-employed market is supported by lenders at the moment, and what steps do you think lenders need to take in order to cater for these customers more so? So, Danny, let's come straight to you.
So it's very kind of that. I think there's a lot we can do. I think we have to take a very pragmatic approach. We have to realise that sadly some businesses have really struggled, and levels of income mean how they may have a short shelf life now. So from a risk point of view, from a lender, I can understand some difficulty there. But there's also a number that have thrived, and others are just waiting for the green light to get back out. Because, you know, we're all having to be told to stay at home for good reason and everything. So, you know, the classical hairdresser is a great example. They can't really actually go anywhere, yet you know that as soon as they can, they are going to be very, very busy people. So it's about finding a balance which actually enables lenders to have a pragmatic view without increasing their risk unnecessarily, but just be realistic and honest about, are these businesses sustainable? Can they actually survive the test of time? And is it just the circumstance having to go through here that is causing the pain? So as long as the loans are absolutely affordable and assessed in a way that we've all got very, very used to, then great. You know, it's very hard to exclude someone who actually has, you know, has got money that does actually have a future, whereas opposed to someone who doesn't. And I think it's just finding that balance. That's where manual underwriting really plays a strong part, and that's where the real pragmatic and just sort of, we are dealing with people, we are dealing with individuals, and just by using those relationships to build those will give us the right outcomes. And I think that's been a really, really important part for lenders, and I think that will be continued focus going forward.
Absolutely. Craig, I kind of feel that you want to jump in here, but I'm just going to go to Nicola first.
Always patient.
I absolutely agree with what Danny said, and something Danny said earlier as well, just to pick up on, because I think you're absolutely spot on there, Danny, that the self-employed market is going to increase. And if you say, well, on what basis? Well, look, let's just rewind more than 10 years ago now, when we had the credit crunch. We saw what happened there. That's when the people had lost their jobs, and they were doing the same job on a self-employed basis, or they perhaps had a dream always to take that redundancy and start a business. And so I think that's really, really important what Danny mentioned there, because that means that, you know, we've got the self-employed market as we have now, and that's going to increase. So how are we going to manage it? I think in terms of you know, how that sort of pans out, that the specialist market comes into its own, manual underwriting, absolutely, you know. And I always think, you know, I have been a broker, and I think the good test is when you're sat with a client and you look at that case and think, if this was my money, would I lend them that money? You know, that's the acid test, really, isn't it? And you know, as Danny rightfully said, there are some businesses that are just not going to make it through this, and that's terribly sad. But there are others that, as soon as the doors open, they'll be ready to trade again. So I think thinking about looking forwards, I think the biggest thing with regards to that is how lenders are going to assess accounts, because there is going to be a blip. There's no ifs, buts or maybes, there is going to be a blip. And when we're talking about averaging over the last 2 years or 3 years, how is that blip going to affect people? So if you look at the difference between employed people, they've got furlough, they're back, and that's it. That blip's gone, and it's immediately disregarded as soon as they're back. This blip follows self-employed people around for years to come, and it affects their affordability. So I think that's going to be key, looking at how lenders address that then going forwards.
Absolutely. That's a brilliant cue, Nicola, for Craig.
Yeah, so I agree. It's going to be very challenging. So I think the key thing is lenders need to be far more flexible, possibly, than they've been in the past. So, you know, it's difficult because brokers, customers want certainty, and it's great having really clear underwriting rules that everybody can understand. That's a yes or that's a no. But actually, I think what we do need to do is look at things on a case-by-case basis. You know, a few bad months at the start of COVID doesn't mean that business is struggling. It could be doing very well for the last 9 months or the last 6 months. So what does that mean? Because again, their accounts might not look great for this year. So it's taking the time to understand that and really having a sensible view on the sustainability of that business. And I think mortgage brokers, lots of self-employed mortgage brokers, probably a perfect example. You think at the start of the financial year, you know, hardly doing any applications. I'd imagine June, July was a pretty bleak time to be a mortgage broker. Not many completions coming through. You know, proc fees were pretty hard to come by. But then a really strong second half of the year. Huge boom in applications through August, September, October, loads of completions as we come up to the end of the financial year with the stamp duty holiday, etc. So a really spiky picture for a mortgage broker. And I think that's fairly typical of a lot of businesses. So it's how do you look at that? Because you look at the year, but actually there's a much more detailed story below that. So it's being able to understand that, and, you know, things like the bounce back loans, how do businesses treat that? Personally, I think a bounce back loan can be a great thing for a company. If you've got an accountant that says take this loan to 0% for the first 12 months, pay off your van that you're paying 7% on, that seems very sensible. But so you wouldn't want to penalise that business for taking a bounce back loan, because that's a very sensible thing to do that actually makes it more sustainable. Understanding that, understand the difference with the self-employed grants, etc., which obviously they only go to businesses that have been affected. So what does that mean? So I think, you know, we need to move away from the old-fashioned kind of thinking, putting people in a box. You know, employed looks like this, self-employed looks like that, and it really needs to be a good case-by-case basis.
Absolutely. And I guess one of the benefits of being a specialist lender is that we have the ability to do that maybe somewhat more than a high street or a larger lender. Okay, brilliant. So Craig, thank you. You mentioned bounce back loans, and actually my next question covers that. So the government have introduced obviously the grants, the bounce back loans, etc. But it's somewhat making maybe self-employed applicants maybe feel a bit more apprehensive about, can they get a mortgage? So this makes, even more so than ever before, intermediaries and brokers a more important part that they have to play. So this question is about, how do you think lenders will approach next tax year figures, or what do you think they should do? And how should intermediaries be supporting their customers at this time? Nicola, I'll come to you.
So the bounce back loans, but and the SEIS scheme. This is an interesting one, and it kind of mirrors the mortgage payment holiday scenario as well. So when you look at that, and as Craig's just said, how many people took those because they absolutely needed them, and how many people were opportunities in their, thinking, okay, let's take that, it's cheap money and what have you. And it's how do you differentiate between the two? So one size does not fit all in this scenario, and a lot of people. But then again, you could look at it and say, well, actually, in the example that Craig gave, somebody's been offered cheap money to pay off a more expensive loan, that's been quite savvy with their business. So again, it's very difficult, and there's nothing but manual underwriting that's going to get through that, really, to be fair. I think, going forwards, I mentioned earlier about how that the accounts are assessed, whether we're looking at a blip. The example that Danny gave about hairdressers, the minute that door's open, they're fully booked. So it's going to be a case of maybe industry by industry, and having a look at each one and see. We had a really good example of one lender that had said, when gyms were closed, as they are now, and this was somebody who had 6 gyms, and you would think, oh, you're never going to lend to them. But they did, because people were still paying their memberships. So yes, their doors were closed, but people are still paying their memberships. So it really, you just can't assume anything at all. And never has it been more important for cases to be written for self-employed people on a case-by-case basis, I think.
Yeah, absolutely. Thank you, Nicola. And Danny?
Yeah, I'll just add to that. Some great points that Nicola makes. We've got to remember that lenders were very happy to take very cheap money from the government if they could access the relative schemes there. And so businesses are doing exactly the same thing, whether they needed it or not. And some people, as you rightly say, have just taken it just because they can, not because they want it. It's the same people took payment holidays because they can. Did they really need it? It's just been allowed within the rules. So is it right to include those sort of things within the affordability calculations? Ultimately, there will be an outgoing for that company and income. That's what you're going to use as your basis of assessment. So I think that is really important. I think also, we've got to reflect that this is now a time where customers need advice like no other. I think, we are seeing, I saw a stat the other day that 79% of business is being written through intermediaries. Why advice is so key and so important, because there is a lot of uncertainty from customers, and I'm sure if they are going to the high street, the amount of times that they're saying no, well, in fact they probably can't get to the high street because actually the branches are not open, or are not open at the times where we want them, which is also quite fascinating. So they are finding other ways to do this, and the intermediary is key. They've got the expertise, the knowledge, the access to a wide range of numbers, a wide range of tools to find the answers, and so intermediaries need to be right on top of their game and actually promoting themselves to the customer, saying we can help, but they've got to understand the challenges too. I pick up that one of the key areas, funny enough, is that not so much about placing the cases. We've recognised there have been challenges, but the market's getting better. But actually the quality of case packaging. We're all looking at lenders saying that it's taking days and days, weeks even, to get around to cases. And we know that self-employed cases take that much longer. So actually, what can we do to actually make sure the cases are better presented, better prepared, and having the right information to make sure that we get the best possible outcome and service for our customers? Because they're going through a worrying time as well. They don't want it going on for weeks and things. And especially as we've got the stamp duty deadlines coming, other deadlines coming as well, are they being affected by the fact we're not packaging cases properly? So I think it's some forethought there from brokers as well, which would be really good. But Craig, can I come back to my point about IR35 here? Could you give us a brief idea of what you may do as a lender in order to sort of think about customers that are contractors today that may have to move to either a self-employed or employed model? Will you treat affordably differently?
So I think it depends when they make the switch. So obviously the whole point of IR35 is the government trying to crack down on people who are long-term contractors for a given business, because they don't deem them to be able to, they're not paying enough tax, so they typically set themselves up as a business, there's lots of write-offs, etc. So I mean, they're trying to get people to, they're kind of saying you're effectively an employee because you've been, potentially, I think we all know contractors who have basically been at the same desk in the same business for 7 or 8 years, works as a contractor. So it's that kind of thing they're trying to cut down on. So, people will either go one of two ways. They'll either end up being employed by that business, which I think is the government's intention. They've got much better visibility and a higher tax take, or they'll have to prove they're not kind of solely contracted to that business and do other things and act more like a traditional contractor in the way that you would expect. And I think we're starting to see more people actually move to the employed route. I think businesses have really cracked down, you know, they understandably want to stick by the rules. So had some fairly clear guidelines that if you've got all these contractors in your businesses, especially some of the big businesses, some of the big banks got loads of them in the IT departments, you need to either employ them or get rid of them or find a different way of working with them where they're not just working for you. I think we've seen a lot of that over the last 12 months, and some of the big international banks have done a lot of that. So I think from our perspective, it will be, well, if they've gone employed, what does their new employment look like? You know, clearly, if you're working for one of the big banks, you'll be partly dependent on bonus income. So how do you think that will evolve? And if that's happened a while ago, then you've got much clearer clarity. We'll typically look at a contractor as long as we're in the same industry. We don't expect you to have a track record if you've become a new contractor, and that should work the other way as well. So for us, it should be fairly simple because it's what we do. I think maybe some of the less manually underwritten other lenders will struggle with that. For us, I don't think it's much of an issue, but yes, it is that whole thing about you've had a recent change from contract to perm or the other way around. How does a lender treat that? And I think that's why, you know, coming to a club for advice, looking at the kind of service Nicola can offer is really important, because they're the kind of questions you need to understand as a broker when you're considering where to place that case.
Absolutely, good question, Danny. And I think you hit the nail on the head with the packaging and the service piece as well. And Eloise has actually got a session after this where she's going to cover packaging for us, so really important. We have run out of time, but I have one final question. So just in a few words, if that's okay. The future, let's look into the future. So the future of the self-employed market, how do you think it looks, Nicola?
As we've said, I think it's going to increase as we saw the trends the last time we had something that, you know, a crisis that hit. What I would like to see in terms of lenders is a lot more focus put on looking at current business levels rather than looking back retrospectively, because I don't think a retrospective look over the past year, 2 years or 3 years with what's just happened is going to reflect fairly on that person, that self-employed person or their business. So I would like to see underwriting done with a clear view of where that business is now and how it's performing.
Brilliant, thank you. Noted, Craig, from Nicola. And Danny, just a few words.
I agree. I think it's going to be a very strong market. I think we're going to see a lot of new businesses, maybe in some different areas that we haven't thought of before, as customers now decide, or so business owners think, well, what does the current customer need? Compared to where we were in the pre-COVID environment. I think technology is going to continue to play a part. I think it will make the journey easier, better as we get access to more and more records and things, but advice is still going to be at the heart of everything we do, and the need for manual underwriting, I think, will go a long way. I agree with Nicola. Let's deal with these customers in a different way. Let's not be too retrospective. We've learned we can start to look at them in the here and now, and how do we project that going forward. But for me, I think it's a really, really positive place, a really strong place, and I think there's a lot of customers that are going to need an intermediary's help.
Absolutely, thank you. And Craig, for once, I'll give you the last word.
Thank you, just for once. Yeah, so I agree, really positive. I think in the future there'll be more self-employed people. That's what we saw from the last recession. I think probably the key thing I'd leave it on is I think it's a really good opportunity for brokers. Like Danny said, people need advice more than ever. The more complex the market gets, the harder things are, the more people need advice. And these guys really need your help. So think beyond the usual suspects. You know, make sure you're looking at what criteria is out there. Things are changing very quickly, which makes it hard to keep up. But it is a good opportunity, and it's a real opportunity for brokers. The kind of robo brokers and the aggregators, that they can't do this kind of stuff that the brokers can do by understanding what's available, taking the time to understand that client's needs and finding the right place to put the case. It's a really good opportunity for brokers going forward.
Absolutely. Thank you, Craig, and I agree, a great place to end this debate on. So it just leaves me to say thank you once again. Thank you, Danny, Nicola and Craig, for joining us today, and hopefully we'll speak to you again soon.
Thank you.